on, everyone? Welcome to the Stock Market Morning Prep video for Friday, January 23rd. Happy Friday to all. We had a big reaction to Mario Draghi with his stimulus package, 60 billion euros in bond buying. Everybody liked that, as well as equity markets. And we did get a big move higher yesterday. Now, we mentioned yesterday about watching the IWM, which is the Russell 2000 ETF, and or the Russell Index, whatever you prefer. And watch that XLF. We had a lot of, there's a lot of banks and financials in the small cap sector. And sure enough, the XLF started making some new highs. Russell did break out that 1180 on a closing basis, which I said, let's watch it. Now, one day does not make a trend, but it is a very good sign that we could be challenging the highs and having another leg higher. And we're going to see what's going to happen the next couple of days. Now, Friday generally is bullish, but we did get a big move yesterday, so today might be quiet. But let's take a look at the bigger picture. I'm not going to go into the indicators. I'm going to show you one. But what's interesting to me is in front of me is the 30-year Treasury bond USB. This is a weekly chart. And as you can see, this dates back to 1996 on the right down in this area. And you can see every time we hit this trend line, bonds would sell off. And as you can see here, we are at it right now. We sold off, we hit it, and now we're touching it again. That is a good sign if bonds were to sell off that we'd get more money flowing into U.S. equities. So this could be a very good sign that we may have our next leg higher. Now, as traders, we just like to trade the trend. And right now, as you know, the longer-term trend is up. Short-term trend was down until yesterday. And that does not mean that it's still not down. We just need to see a couple of days of either consolidation or at least breaking this downtrend, which we did yesterday. So let's take a look at the McClellan Oscillator, which is a very good, reliable breadth indicator of overbought and oversold. Now, as you can see here, we're only at 27, so there's plenty of room to run to the upside before we even become overbought. So that's also a very good sign that money, new money, may be flowing into equities. And we did have an outside day reversal, which is a very good sign that there should be at least new money put to work. Now, let's take a look at these indexes, see what we are. We have the SPY, as you know, the spiders, the S&P tracking ETF. And as you can see here, we clearly broke this downtrend trend of lower lows and lower highs. Yesterday, we're out here. Now, again, remember, yesterday, one day does not make a trend, but this is a very good sign. Even if the markets were to break higher or even close within this candle, at least let's keep that 50% of that candle in place. And I think next week sets the stage for higher prices, okay? We also have the MACD and the RSI, as you can see, rolling over. Would be a great sign if we can break this downtrend line on these two indicators. And if that's the case, then we would pretty much say let's look for higher price, at least challenge the highs for now, and then again we would reevaluate it. Let's take a look at the transports, our leader here of the five that we follow. And as you can see, this broke to the upside in a large engulfing candle. Very, very good, better than average volume. So this has also broken the downtrend of lower lows and lower highs. So our leader moving higher, a very good sign that equities will move higher as well. XLF, I wanted to show you. I showed you this chart yesterday. We are still in a weekly chart. Uptrend still intact, as well as the other weekly charts in the other indices that we follow. Still intact, okay? So this also having a weekly bar close today. Of course, it needs to close today. But if today there are no surprises, we should get a decent move in equities as well. Now remember, XLF, a lot of banks and financials. If we could take this area out, and then we have the IWMs move higher, then again we set the tone for higher prices. And here's the IWM that I showed you yesterday. This is the line I drew yesterday morning, and we have to break the downtrend, excuse me, and we did so. And we also took out this little area of consolidation, and now we really sets the door for higher prices. I would be looking for, my analysis work is, as I see when I identify the trend, and now we have possibly a trend change to the upside, I will be looking for pullbacks into support in an uptrend, or strong stocks pulling back. You don't want to buy weak stocks. You want to buy strong stocks. You want to short weak stocks. So that's what I'm looking for probably for today, and probably, again, setting the tone for next week for higher prices, okay? Let's take a look at two more, the diamonds and the Qs. Now, the diamonds didn't really do too much, which is the Dow Jones ETF. But you know what? It is the lesser of the five. We did get a big candlestick here, wicks on both sides. So you know what? We'd like to see this thing move higher too as well. But again, inside day from the previous day, but that did alleviate the lower lows and lower highs. So that is also a decent sign as well. Now the Qs being technology driven, obviously with Apple, this is a very good sign. We took out the downtrend of lower lows and lower highs. I do think that this is a great spot here. And if we do get technology and the banks and financials, you have two sectors that are needed for equity prices to move higher. And if they are moving higher and bonds are at resistance, guys, I got to tell you, this is probably going to set the trend for the the S&P 500, looking at 21.50. I was looking for that price sometime last year. We got close, obviously no cigar, and did 2075, I believe it was, close to 2100 anyway. So I am still looking for at least a tag of that 2100-ish, and we'll see where we go. But right now, we are looking for higher prices. Again, if there are no surprises today, even if we get a consolidation, I think that equity should be running higher, at least going into next week. Hope it helps. Enjoy the weekend, and we will be back with a full report on Monday.